Welcome to your custom deep dive. We're taking your sources and plunging into a topic that touches your wallet every single day. The future of payments.
Yeah, cash is feeling less common these days, isn't it? But the truth is, well, the way the world pays is undergoing this massive, really complex transformation.
And we're going to look at the data behind that shift.
Exactly. Explore where it's all heading and, ask if cash still actually has a seat at the table.
To do that, we're drawing on insights from the Bank for International Settlements, that's the BIS, the Brookings Institution, Knowledge at Wharton, JP Morgan, and also Cash Essentials.
Our mission here is basically to cut through the noise, understand the key trends driving the shift towards digital payments, and state-backed digital currencies too.
Weighing the potential benefits against some very real challenges.
And seeing what the data actually says about the role cash continues to play.
All right, let's unpack this then. Looking at the numbers, how is the way we pay changing right now?
Well, the big picture is pretty undeniable. The sheer volume of cashless payments, it just continues its upward march globally.
Okay.
But your sources, particularly that BIS data from 2023, they highlight a really striking difference between emerging market and developing economies, the EMDEs, and the advanced economies, the AEs.
What difference really jumped out at you there?
It's the number of cashless payments per person. In EMDEs, it saw this explosive growth in 2023, soared 29%. From about 293 to 377 per person.
Wow, 29%.
Yeah. Now compare that to advanced economies where the growth was, well, much more modest. Just 4%, moving from 468 to 487.
That 29% growth is just phenomenal. What payment methods are actually powering that surge in the EMDEs?
The sources point specifically to two things. Credit transfers, which grew 35%, and e-money, which saw an incredible 48% jump.
48%.
It's fascinating because per capita, EMDEs actually surpassed AEs in the number of credit transfers and e-money payments in 2023.
That really challenges the assumption that advanced economies are always ahead on every single digital metric. Does this mean cards are less common in EMDEs compared to AEs?
On average, yes, that's right. AEs still lean heavily on payment cards. They logged about 306 card payments per person in 2023.
Okay.
That's significantly more than the 188 times per person in EMDEs. So while EMDEs are catching up really fast, they're often doing it through different digital channels, not just cards.
Okay, so the number of digital payments is booming, especially in EMDEs. But is the value, the actual amount of money moving through these systems, keeping pace?
This is a crucial nuance from the data. While the volume increased dramatically, the value of those cashless payments as a percentage of GDP, it generally declined or kind of plateaued in 2023.
Declined or plateaued?
Yeah, down about 9% in AEs and pretty much stable in EMDEs.
So if people are making more digital payments, but the total value isn't rising proportionally with the economy, what does that tell us?
It strongly suggests that digital payments are increasingly being used for, well, smaller transactions, everyday stuff.
Right.
The average value of a credit transfer, for instance, it dropped by 9% in AEs and a pretty substantial 21% in EMDEs in 2023.
21%.
Yeah. This really indicates digital is becoming the go-to method, not just for big transfers, but for everyday lower value purchases or, person-to-person payments.
And a key technology enabling those smaller, faster digital payments, especially in EMDEs, seems to be this rise of fast payments.
Absolutely. Fast payments, sometimes called instant or rapid payments, they're defined as typically small value credit transfers that clear in real or near real time, available 24/7.
Always on.
Exactly. And the BIS data highlights them as a really significant driver of that credit transfer growth we mentioned, and just a clear indicator of increasing digitalization everywhere.
How varied is their adoption across different places? Is it uniform?
Oh, it's hugely varied, massively different. In 2023, fast payments as a share of total cashless payments, it ranged from like a tiny 1% in France.
It's 1%.
Yeah, all the way up to a dominant 82% in India and 63% in Argentina. That's a massive spectrum.
82% in India is just extraordinary. Who are the leaders then in terms of per capita use? How many times are people actually using these?
Okay, so in 2023, Brazil led the pack with 193 fast payments per person. Then you had Argentina at 179, Korea at 172, and Sweden at 95.
So these numbers show a significant chunk of daily transactions are now happening instantly in these countries.
For sure.
And just like the average value of other credit transfers, I assume the average value per fast payment also differs dramatically.
Yes, considerably. It was highest in places like Japan, around $3,600. Mexico, over $3,200. Korea, about
Okay,
$2,600.
so larger amounts there.
Right. But then much, much lower in Argentina, like $62, Sweden $47, and India just $24 on average per fast payment.
That variation likely tells us a lot about how these systems are being used, right? Are they for big bill payments, or are they dominating the small coffee purchase or splitting a restaurant tab?
Precisely. Those lower average values in places like India and Sweden strongly suggest they are heavily used for retail and person-to-person transfers. Small, everyday stuff.
Okay, so fast payments are growing fast. Is that growth cannibalizing other digital methods like cards? Or is it maybe replacing cash? What does the data say?
Well, the data offers an interesting answer here. It's not a simple yes or no. In countries like Argentina, Korea, Mexico, and Sweden, the strong growth in fast payments has not really significantly impacted the upward trend in card usage.
It's interesting, so they coexist.
It implies they are often being used for different things, perhaps adding a new layer to the payment landscape rather than just replacing existing digital methods.
But you mentioned India earlier. Is India the exception again?
India is a key exception here, yeah. As fast payments grew there, debit card use actually declined. So that suggests that in certain contexts, fast payments are serving as a direct alternative to card transactions.
And is there a clear relationship between more fast payments and less cash use overall?
Well, jurisdictions with higher fast payment uptake do tend to have lower average card transaction values and also less cash in circulation.
Right.
However, the BIS notes this doesn't automatically mean fast payments are directly replacing cash. It could be that fast payment adoption and reduced cash use are both just indicators of broader underlying digitalization trends.
Like more e-commerce or something.
Exactly. Increased e-commerce reduces cash use and might also spur mobile-based fast payments. What's clear is that fast payments are a really visible sign of this accelerating digitalization.
Okay, despite this powerful digital current, your sources also emphasize that cash hasn't vanished. It still holds a significant place.
That's a vital point. It often gets overlooked in the narrative of a cashless future. While cash in circulation as a percentage of GDP continued its general decline in most places in 2023.
Which was around 8% in AEs and 7% in EMDEs.
Roughly, yeah, though with big outliers like Japan way up at 22% and Sweden down near zero at 0.9%. But here's the really critical piece of data.
This is where it gets interesting.
Right. The sources highlight that cash withdrawals, which many see as a better proxy for cash usage in payments, rather than just holding it, they generally stabilized in 2023 after years of decline.
Stabilized. That's a pause in the trend we've been seeing.
Yeah.
What could that signal?
Well, it suggests there remains this considerable, persistent demand for cash, specifically for making payments. The decline in circulation might reflect changes in hoarding or maybe bank reserves, but stable withdrawals point to cash still being actively used in transactions by a significant number of people.
Are there differences in withdrawal patterns between AEs and EMDEs like we saw with payment volumes?
Yes, there are. Just like the payment volumes, the value of withdrawals was lower as a percentage of GDP in AEs, around 6%, than in EMDEs, where it was 15%.
70%.
And on a per capita basis, EMDEs had higher withdrawals, 21 per person, compared to AEs at 13.
So it's possible cash is used more as a stable store of value in some advanced economies, but it's still being actively pulled out of ATMs and used in payments much more frequently in developing economies. Does that fit?
That interpretation certainly aligns with the data we have. It suggests cash serves different primary functions depending on the context.
And the perspective from Cash Essentials strongly reinforces this, doesn't it? Describing cash as a public good driven by actual consumer demand.
Absolutely. They point to its non-digital nature as its core strength. They highlight its crucial role in emergencies or crises where digital systems might fail. Think power outages, network collapses, or even pandemics disrupting infrastructure.
Right, the cash is king scenario.
Exactly. As they put it, no power, no phone. Cash is king. It acts as this necessary fail-safe in the system.
This broad shift towards digital payments and the potential long-term implications for cash seems to be a key driver behind central banks globally exploring their own state-backed digital currencies, known as CBDCs.
Right. A central bank digital currency, or CBDC, is essentially a digital form of a country's fiat currency. It's issued and backed by the central bank itself.
So different from money in my regular bank account.
Exactly. Unlike the money you hold in a commercial bank account, or private digital money like stablecoins, A CBDC would be a direct liability of the central bank, just like physical cash is today.
And many central banks see this as a way to keep their money relevant.
Precisely. Relevant in an increasingly digital world where cash use might be declining.
And that 2021 BIS survey, it paints a picture of pretty widespread global momentum here, doesn't it?
Oh, significant momentum. At that time, 90% of central banks surveyed were exploring CBDCs in some form. And over half were already moving into development or conducting concrete experiments.
Wow, 90%.
Yeah. And the work on retail CBDCs, the ones designed for you and me, the general public, was reported as being more advanced than wholesale CBDCs, which are intended more for financial institutions.
What sort of lit a fire under central banks to accelerate this work? What were the triggers?
Well, the sources indicate COVID-19 certainly played a role by highlighting the potential need for, say, rapid digital government payouts, but also the emergence and growth of stablecoins and other cryptocurrencies. That acted as a significant accelerator, particularly in advanced economies. They prompted concerns about financial stability and, the future role of state money itself.
Do the reasons for pursuing a CBDC differ depending on the type of economy? Like AEs versus EMDEs?
Yes, quite a bit, according to that 2021 data. For AE central banks, the primary drivers were things like domestic payments efficiency, enhancing payment safety, and addressing financial stability concerns.
Okay, efficiency and stability.
But for EMDE central banks, the top priority was financial inclusion, getting more people into the formal financial system.
That makes a lot of sense.
They also cited efficiency, safety, and monetary policy implementation, but inclusion was really paramount for them.
What about improving international payments? Is that a factor?
Yes, both AEs and EMDEs see cross-border payments efficiency as a growing motivation, particularly for wholesale CBDCs.
Right, the ones for banks.
Exactly. Initiatives like Project Dunbar are specifically looking at how multiple central banks could potentially use wholesale CBDCs for faster, cheaper international settlements between banks.
What are some of the headaches in current cross-border payments that CBDCs could potentially fix?
Central banks identified several pain points. Limited operating hours of the old legacy systems, long chains of intermediaries adding time and cost, a lack of transparency on exchange rates and fees.
Hidden costs.
Right. Plus outdated technology platforms, fragmented data formats making compliance checks difficult, and just complex compliance processes overall. Wholesale CBDCs, by potentially offering direct settlement using central bank money, are seen as potentially more effective at tackling these specific interbank frictions.
So are central banks actually planning to launch retail CBDCs anytime soon? What's the likelihood?
Well, the 2021 survey showed about 68% of central banks considered it likely or possible they would issue a retail CBDC in the short or medium term.
68%.
And EMDE central banks indicated a higher likelihood than AEs. The intention to issue had clearly increased for many between the 2018 and 2021 surveys.
And wholesale?
For wholesale CBDCs, about 54% saw issuance as likely or possible in the medium term.
How are they thinking about the design of these retail CBDCs? Like, would the central bank hold my account directly?
Probably not. Most central banks exploring retail CBDCs are considering what's called a two-tiered model.
Two-tiered?
Yeah. In this setup, the central bank issues the CBDC, but private sector firms, like the banks you use today, or maybe new payment providers, would handle all the customer-facing stuff.
Like opening accounts, processing payments.
Exactly. Onboarding, managing accounts or wallets, processing the payments. It leverages the existing infrastructure and expertise that's already out there.
And connecting it to the money I already have in my normal bank account seems pretty important too, right?
Definitely. Interoperability is a key design consideration. 76% of central banks exploring retail CBDCs were investigating how to integrate their CBDC with existing payment systems.
So you can move money seamlessly.
That's the goal. Seamless transfers between CBDC balances and commercial bank deposits.
Is the legal basis for issuing a CBDC actually in place everywhere? Can they just do it?
Not yet, no. As of 2021, about 25% of central banks reported they currently lacked the legal authority to issue a CBDC.
A quarter of them.
And another 40% were unsure. So significant legal groundwork might be required in many places before they can move forward.
Okay. While central banks are exploring the state-backed digital money, what's their view on the private digital money that's already out there? Like cryptocurrencies and stablecoins, particularly for actual payments?
Well, the 2021 BIS survey data indicates that from a central bank perspective, consumer use of cryptocurrencies for actual payments was seen as, trivial or confined to very niche groups.
So despite all the headlines, they didn't see people using them for groceries or paying bills.
That was the perception reported back then, yes.
Yeah.
Their focus tends to be on widespread systemic payment use, not niche applications.
What about the potential for private digital assets to become widely used for payments in the future? Are certain types seen as more promising than others?
Yes, there's a distinction. Single currency stablecoins, the ones pegged one-to-one to a specific fiat currency, like the US dollar, think Tether or USD coin.
Right, the dollar-backed ones?
Exactly. Those were perceived as having the highest potential to become widely accepted payment methods.
And others.
Stablecoins backed by commodities or other crypto or complex algorithms. Those were seen as much less promising, likely due to big concerns about their price stability and the underlying mechanisms holding that peg.
So potential depends on stability and trust.
Pretty much. Issuer reputation and, crucially, regulation are seen as key factors.
And are central banks looking into the broader impact of stablecoins beyond just payments?
Absolutely. Around 70% were analyzing the potential impact of stablecoins on monetary and financial stability back in that 2021 survey. There's also a recognized lack of robust data on the actual use of any crypto assets for payments, which some central banks are trying to address through surveys of businesses and consumers. Getting a clearer picture is important.
Now, to see what happens when a country goes really far down this path towards digital payments, let's look at Sweden. It often comes up.
Yes, Sweden is frequently highlighted as being right at the forefront of this shift. It was even anticipated by some to become the world's first truly cashless society around March 2023.
Meaning cash just wouldn't be generally accepted anymore.
Exactly, not as a generally accepted means of payment everywhere.
What unique factors drove Sweden so far, so fast? It seems quite extreme compared to others.
Knowledge at Wharton identified several key drivers. One is retailers just deciding to stop accepting cash when the costs, things like security, managing the cash, exceed the profit margins they make from cash transactions.
And there's a threshold for that.
They found it tends to happen when cash use drops below about 7% of transactions. And a critical legal point in Sweden is that contract law takes precedence over legal tender laws in this context.
So stores can just say, no cash.
Essentially, yes. They can legally refuse cash just by posting a sign. That's a significant difference compared to places where cash as legal tender must be accepted for debts.
That really changes the landscape for businesses. What else?
Other factors include historical ones. Sweden adopted payment cards early. They had established digital bank accounts, robust internet banking infrastructure. The central bank also outsourced its cash handling services quite a while ago. Plus, a history of bank robberies actually encouraged many workplaces to go cash-free simply for safety reasons. And things like tax deductions for domestic services reduced the need for informal cash payments in that sector.
And of course, that hugely popular mobile app.
Yes, Swish. Launched back in 2012, it's immensely popular for peer-to-peer transfers, and it's expected to soon overtake cards even in retail payments. Consumer convenience is just a massive factor driving its use.
Beyond the tech and the law, is there a cultural or societal element at play in Sweden?
That's mentioned too. High levels of public trust in both the government and the banks are cited as somewhat unique to Sweden, and that seems to foster greater acceptance of these kinds of changes in payment systems.
Given the potential decline or even disappearance of cash, what's the Swedish central bank, the Riksbank, doing about it?
Well, the Riksbank is actively exploring an e-krona, which is their version of a CBDC.
Okay.
Their main motivation seems to be ensuring that if cash does effectively disappear from general use, there's still a functioning state-backed alternative. So the country isn't entirely reliant on the private banking system for its fundamental payment infrastructure, a public option, essentially.
But there's also pushback, right? You mentioned the Content-to-Bra, the anti-cash movement. What are their main concerns?
Their concerns are significant, and they really mirror debates happening elsewhere. They highlight the potential exclusion of vulnerable groups, the elderly, low-income individuals, immigrants who might lack necessary ID, people without fixed addresses, even beggars who rely on cash.
So access is a big issue.
Huge. Loss of privacy due to traceable transactions is another major worry, as are increased security risks from cyber attacks and potential total dependence on vulnerable technology infrastructure. What happens if the system goes down?
And what about the argument against cash being essential in crises? Do critics have a counter?
Some experts counter that argument by pointing out that IT failures can also affect the digital registers needed for digital payment systems anyway. And human error is a significant factor in many security issues, whether it's physical cash handling or digital systems.
True.
Ultimately, some argue the shift to cashless is just sort of inevitable due to technological and economic forces pushing in that direction.
Your source also mentioned banks themselves making it harder or more expensive to handle cash now.
Yes. The combination of security costs and pretty strict anti-money laundering regulations makes cash handling increasingly cumbersome and expensive for banks. And that, in turn, impacts its availability and ease of use for the public.
If certain groups are at risk of being excluded, whose job is it to make sure they aren't left behind in this whole digital transition? Is it the banks?
Well, the perspective shared in the sources is that it's not something the banks should, or maybe even can, shoulder alone. It's seen more as a societal responsibility,
Societal, how so?
potentially integrated into education systems, for instance, and also requiring parents to actively teach children about the concept of value when money is increasingly just abstract digital numbers on a screen.
Okay, stepping back and looking at the really big picture now, what are the overall potential advantages and disadvantages of moving towards a more cashless society based on everything in your sources?
Let's start with the potential upsides. There's the clear convenience, right?
Yeah.
And the sheer ubiquity of digital payments available anywhere, anytime with just a phone or a card. There's also increased security against the physical risks of cash, like losing it or having it stolen from your pocket or a business till, though obviously digital has its own risks.
And the transparency aspect you mentioned earlier, that seems significant.
That's a big one, yes. Traceability provides transparency for consumers trying to track their spending. It helps businesses with financial management and potentially reduces unpaid transactions.
And on a larger scale.
On a macro level, it could hinder illegal activities like drug dealing and money laundering. It could also bring more off-the-books economic activity into the formal economy, which might increase tax revenues for governments.
What about financial inclusion? That was a big driver for EMDE central banks exploring CBDCs.
That's definitely a potential benefit, providing access to digital payment systems and basic financial services for the poor and unbanked. It could potentially make it easier for governments to distribute things like stimulus aid directly.
Any other benefit?
Lower transaction costs and less hassle for small businesses dealing with counting and securing cash. And in the more academic realm, some sources mention the possibility of new monetary policy tools, like making negative interest rates more effective if cash were largely replaced, and maybe fostering more competition and innovation in payments if it's designed well.
Okay, those are some significant potential benefits. What about the other side of the coin? The significant potential downsides and risks.
The most critical risk, highlighted repeatedly, is the potential for significant exclusion of vulnerable populations.
We talked about the elderly, low income.
Exactly. The elderly, low-income individuals, those without a fixed address or bank account, people in areas with poor connectivity or low-tech literacy, immigrants who might lack the necessary ID, and even marginalized groups like beggars. Robust safeguards and provisions are absolutely essential to prevent leaving these groups behind.
Privacy is another major concern that comes up a lot.
A huge one. Digital transactions create this detailed, traceable, and auditable record of your financial life. And that raises serious concerns about potential surveillance and monitoring by governments, by corporations, by other entities.
It's more than just economic then.
Deciding how much financial privacy a society is willing to trade for transparency and efficiency is seen as a fundamental social decision, not just an economic or technical one.
And the risks related specifically to the technology itself.
Well, there's increased vulnerability to cybercrime, data breaches, and digital fraud like phishing scams. That's a real risk. There's also a deep dependency on digital infrastructure, on reliable electricity grids, on internet access.
Which cash doesn't rely on.
Right. Cash currently serves as that vital non-digital backup in case of widespread IT or power failures. Take that away, and you lose your fallback.
Are there potential risks to the traditional banking system itself?
Potentially, yes. If a retail CBDC, for example, was perceived as much safer than commercial bank deposits, you could see large-scale shifts of funds out of banks.
Which could destabilize them.
It could destabilize the traditional banking system, potentially forcing the central bank to step into a lending role that commercial banks historically filled. That would be a major shift.
And what about dependence on specific tech firms?
That's another risk. Increased dependence on the perhaps few large tech sums that might end up providing much of the digital payment infrastructure. Plus, specific fintech risks like algorithmic biases in lending, predatory lending perhaps facilitated by data access, and cross-border data protection issues are also highlighted.
Finally, there was that concern about how this shift might affect younger generations understanding money.
Yes, that challenge of teaching younger people the fundamental value of money when transactions become increasingly abstract numbers on a screen, rather than tangible physical notes and coins they can hold and see.
So while the momentum towards digital and potentially state-backed payments seems clear, the path is definitely fraught with challenges. How can societies navigate this transition responsibly, according to your sources?
Well, acknowledging that the trend towards digitalization seems, pretty inevitable is maybe the starting point. But the sources really stress that it demands careful preparation, broad public discussion, and proactive policymaking. It's not something to just let happen.
Which raises that important question. How do we ensure this transition benefits society as a whole rather than creating new divides or leaving people behind?
Exactly.
What specific actions do the experts suggest policymakers should be taking?
They need to actively study the comprehensive implications, not just the technical or economic ones. This requires a really holistic approach, bringing in diverse expertise, economists, yes, but also anthropologists, sociologists, technologists, and tailoring solutions to specific country contexts. Ignoring the potential downsides just isn't an option.
And protecting the vulnerable needs to be absolutely paramount.
Absolutely crucial. Policymakers must put robust safeguards and provisions in place. That means ensuring continued access to payment systems for everyone and providing the necessary education and support.
And that education piece is framed as a broader societal task.
Yes, not just the responsibility of financial institutions, but something potentially integrated into education systems and public awareness campaigns.
What role should the private sector, the fintech innovators, play in this?
Collaboration between regulators and the innovative fintech sector is seen as really important. Working together to shape appropriate and effective regulatory frameworks for all these new digital payment methods. And specifically thinking about CBDCs again, thoughtful design choices are critical. Exploring things like interoperability with existing systems and involving the private sector for customer services like that two-tiered model are highlighted as ways to potentially promote adoption and healthy competition.
And finally, addressing the data gaps you mentioned earlier.
Yes, there's a recognized need for more and better data. We need to understand how consumers and businesses are actually using these new payment methods in the real world, not just theoretically. More research and studies are definitely needed to inform sound policy decisions going forward.
Well, this has been a really comprehensive deep dive. We've mapped the rapid growth of digital payments, particularly that explosion of fast payments we saw in EMDEs. We've explored the global momentum behind central bank digital currencies, driven by really diverse goals, from financial inclusion in some places to financial stability in others.
And we looked at Sweden's journey as a kind of real-world laboratory for what a near cashless future might look like, warts and all.
And importantly, we've seen that while the digital tide is incredibly powerful, cash still serves a vital role, both for everyday transactions for many people and as that crucial backup in times of crisis.
Absolutely. It's not gone yet.
Ultimately, the story here is one of navigating a really fundamental shift. It's about balancing the undeniable potential for greater convenience, efficiency, transparency, maybe inclusion offered by digital systems.
Against those significant risks of exclusion, the loss of privacy, increased security vulnerabilities, and that dependence on complex infrastructure.
It's clearly not just a purely technical or economic decision. It feels like a societal choice that's being made, sometimes implicitly, in real time around the world.
That's a good way to put it.
So here's a final thought for you, our listener, to consider. As digital transactions become the default, not just for large transfers, but for the smallest everyday purchases, and as central banks explore issuing their own digital cash, how might this change not just how we pay, but our very definition of money itself? And how might that impact our relationship with value, with privacy, and with trust in the years to come?